Hi everybody, welcome back to Ox Talks. Thanks for watching the show today. Appreciate the support for the channel. Hit the like button, thumbs up button for me if you don't mind. Share the videos with people as far and wide as you possibly can. If you haven't hit that subscribe button, I would appreciate you doing that. It doesn't cost you anything, and we'll keep growing this community. The thumbnail title today, it's a serious issue, and we talk about inflation. We've been talking about inflation for the last over a year on this channel now. And we were told years ago initially that inflation was transitory. Don't worry, it's something that's going to be fleeting. We'll knock it out quickly. And then recently, over the last year and a half, we've been watching the supposedly the so-called war on inflation. We get to a point now where, and I welcome your comments, your thoughts. I'm not an economist. I'm a lawyer, as you guys know, by trade, but I do watch this stuff. I've lived through lots of economic cycles, some couple of bad downturns, and this appears to be now to me to be an embedded situation. Not only is it not transitory, but it's not going away. And let me share the story with you today. We got the CPI numbers came out. And this is a story I saw out of the Reuters that I will share. Washington, December 11th. U.S. consumer prices increased in November by the most in 7 months. But the Federal Reserve is still expected to deliver a third consecutive interest rate cut next week to support a labor market that has been cooling. So I'm going to share the article with you because we have prices of everyday necessities continuing to go up. Not only stay stable or be reduced, but to increase. At a time when the jobs market is beginning to really struggle, layoffs are becoming more rampant, wages have stagnated, okay? So this is very, very bad news for many Americans in this country. Progress is in lowering inflation, it says, toward the U.S. Central Bank's 2% target has virtually stalled, with the report from the Labor Department on Wednesday showing no improvements in the measure of underlying price pressures over the past 4 months. I saw just a few minutes ago the U.S. stock market closed, the NASDAQ all-time high, closed over 20,000. The S&P, I think, was just a little bit in the negative, and the Dow as well. So the market's once again blowing this off. Okay, gold isn't blowing it off. Gold is up another $24, $25 an ounce today. I did my video the other day about gold skyrocketing. Some of you guys left a couple of nasty comments saying don't exaggerate things. That's not skyrocketing, but it was $40 almost that day. Yesterday it was another $20, $23. Today another $25. Over the past just several trading sessions, gold is up, $65, $70, something like that. So gold understands what is happening. You had Ray Dalio out yesterday saying that there is going to be an implosion in the debt markets, that you better hold real things, you better hold gold. He mentioned cryptocurrencies or Bitcoin, I believe. Again, it's debatable. Certainly, you guys can comment below whether cryptocurrency is a hard asset. I'm a big believer in precious metals, holding the physical form. I believe in cryptocurrency, certainly for certain types of investment. Obviously, do your own homework on that. But anyway, the point is that the inflation is not going away. So why is the Federal Reserve going to come out and cut probably another quarter basis point, 25 basis points at the next meeting? Obviously the explanation they're giving in this article is because it's trying to combat a labor market that has been cooling. So it is a catch-22, and it's going to end, unfortunately, I think, pretty badly. So despite persistently high inflation, there was some encouraging news. Rents, one of the stickier components of inflation, rose at the slowest pace in nearly 3.5 years. If you guys are renters, it says it rose at the slowest pace in 3.5 years. It's still going up, your rents, but they're saying it's not skyrocketing as much as some of the other things. The rise in motor vehicle insurance Another troublesome category, moderated. These factors slowed the increase in services inflation. Some Fed officials will likely take solace in the improvement in services and housing inflation, said Scott Anderson, chief U.S. economist at BMO Capital Markets. With that said, the Fed will need to see more improvement on the inflation front in the months ahead if its plan for a steady pace of additional rate cuts is to be fulfilled. The Consumer Price Index rose 0.3% last month, the largest gain since April, after advancing 0.2% for 4 straight months, the Labor Department Bureau of Labor Statistics said. A 0.3% increase in the cost of shelter, mostly hotel and motel rooms, accounted for 40% of the rise in the CPI. Shelter costs rose 0.4% in October. The cost of lodging away from home, including hotels and motels, jumped 3.7%, the most since October of 2022, and followed a 0.5% rise in October. Listen to this. Food prices increased 0.4% after rising 0.2% in October. So double the increase in food prices between October and November. Grocery store food prices surged 0.5%, with the cost of eggs soaring 8.2%. Beef also cost more, as did non-alcoholic beverages. My next story I'm going to share with you before we finish today is about the beef and the cattle crisis in this country. So please stick around for a few more minutes and watch that part of the show today. Prices of cereals and bakery products fell 1.1%, the most since the government started tracking the series in 1989. Gasoline prices rebounded 0.6%, while the cost of piped gas surged a full 1%. In the 12 months through November, the CPI climbed 2.7% after increasing 2.6% in October. Okay? The annual increase in inflation has slowed considerably from a peak of 9.1% in June 2022. Excluding the volatile food and energy components, the CPI increased 0.3% in November. This is the core inflation, rising by the same margin for the 4th consecutive month. The point is, it keeps rising. It keeps going up. Rents increased 0.2%. Cost of motor vehicle insurance edged up 0.1%. Airline fares rose 0.4% after soaring 3.2% in October. The cost of healthcare services increased 0.4%. Goods prices increased 0.4% after being unchanged in October. In the 12 months through November, the so-called core CPI gained 3.3%, matching the advance in October. Matching the advance in October. Over the past 3 months, the core CPI averaged a 3.7% annualized rate. Despite the lack of progress in the inflation fight, it says, investors took comfort from the moderation in the cost of rent and the fact that core inflation had not deteriorated. Here's the reality there. The markets always look for any silver lining they can hang on to so they can keep going in an upward trajectory fashion, right? And on the hopes that the Fed will continue to not only, will not just finish out this year with a rate cut, but continue into 2025 with more rate cuts, all right? So inflation, not transitory, okay? It's embedded. Again, leave your comments below. For all of you guys who are struggling to make ends meet, I know there are a lot of you out there. I receive and see comments from you all the time. This is not good news. So if you can, as a suggestion, start to put back, and I'm going to talk about the cattle crisis right now, and beef and eggs, things that, not eggs, but things that maybe you can freeze. Can you lock in some value now by stocking up on some of these items, knowing full well that the same piece of meat or chicken or beef or whatever it is going to be probably more expensive next month and the month after and the month after that. So what's going to happen? Is this going to basically go into a bout of hyperinflation in this country with regard to certain items? Again, welcome your comments and your input, but it's just really doesn't look like it's going in the right direction. Zero Hedge article yesterday, and I saved it because I wanted to share it with you. U.S. cattle crisis worsens as nation's herd size continues alarming slide into the abyss. America's beef cattle inventory has steadily declined over the last half decade, reaching 64-year lows and signaling a deepening crisis across the cattle industry. As the cattle crisis worsens, consumers should brace for higher ground beef prices. They're already high, right? So they're going higher. And look at, ground beef was always the go-to, right? Ground beef was always the go-to for a family trying to live on a budget, not wanting to be or not be able to go out and splurge on steaks and things of that nature. Now, I mean, ground beef is out of reach for many people, all right? The shrinking beef supply has pushed the nation's herd size to its smallest level since 1961. With severe droughts, high interest rates, costly feed prices, sliding farm income, surging farm debt, and a shifting consumer preference toward cheaper chicken, struggling, it's not a consumer preference, it's a consumer, they're forced to shift, okay, because they can't afford the beef. Struggling ranchers have been culling heifers, preventing any meaningful recovery in the number of calves necessary to expand the nation's herds. As Bloomberg reports, the nation's cattle crisis is set to worsen with new pressures. Talking about the anticipated tariff, which is expected to tighten domestic beef supplies, and second, immigration reform. All of the things that it says that Trump's talking about have potentially negative consequences, more so than anything positive. Darrell Peel, professor of agricultural economics at Oklahoma State University. So we have the worst crisis of the cattle in this country since 1961, right? But now they're going to, of course, blame it on the anticipated policies from the new administration. In February, the United States Department of Agriculture projected that the cattle herd could begin rebuilding by 2025. However, that timeline has since shifted to 2027. The reason is primarily because of high interest rates and poor pasture conditions in the Midwest. Even as the beef industry has experienced periods of growth over the past decades, the animal count has dropped 40% since its peak in 1975. During the current down cycle, which started in 2020, the herd's been shrinking at the fastest pace since the big farm crisis of the 1980s, according to Bloomberg. So, guys, if you're paying attention to this stuff, if you're able to put back some of these things and lock in prices, maybe stock up on some extra beef if you can, or ground beef if you can afford it, if you're even in the category of people in this country that have not been totally priced out of that segment. But I want to share the article with you. I thought it dovetailed, well, not dovetailed, but it related nicely to the overall inflation picture, which we got this morning. So again, we say button down the hatches, okay? Do the best you can to get yourself financially stable, get yourself out of debt, quit taking on new debt. Please shore up your job position. Hopefully you are able to maintain the job you have and thrive and strive in that position. Maybe it's not your ideal situation, but we know that further job losses are coming in 2025, okay? So I know I'm a little bit all over the board today, but we talk about these big ticket items all the time. You've got to start checking off these boxes, okay? Appreciate you watching the show today. It went a little bit long, but I thought it was an important topic. Not great news, no warm and fuzzies there, but it's reality, all right? So again, thank you all for watching the show and supporting the channel. I'll talk to you soon. Bye.